Is Roblox 22% worse than it was a day ago? Well, the stock price went down 22% on Thursday's trading. Why is that? Did the revenue go down significantly? Did profitability go down? Did free cash flows go down? I need to answer that question. I'm a small investor in Roblox. I really like the company. I think it's a really neat platform where people that play video games, mostly younger people, can go on the Roblox platform and play games. The Roblox model is a lot like YouTube. Roblox partners with developers of video games who put their games on Roblox, and then game enthusiasts can come on the site and play their favorite game, mostly on their phones. It's a model where Roblox provides the platform, owns a relationship with the end customer, the user. The developers of games have a marketplace to take their games. They also have a partner in Roblox who provides the platform. So it's a symbiotic relationship between video game developer and the platform owner, which is Roblox. I like companies like these. It reminds me of YouTube in a lot of ways, and it really is becomes a very valuable company. That's the reason why I invested in Roblox. I really like the company. Their fundamentals are a little immature because it's a young company. I'm going to go through and analyze the fundamentals, analyze the first quarter earnings report, and update my valuation of Roblox and update my plan with Roblox. I own a little bit, a small amount of shares, and I'll update my plan whether I'm going to buy more shares, just hold my shares, or sell my shares of Roblox. Before I jump into that, just a quick reminder, I'm an individual investor. Just sharing my journey, sharing my experience as I evaluate companies, analyze them, and it is just my opinion. It is not a recommendation to buy Roblox or to sell Roblox, and I provide no financial advice. Now let's take a look at Roblox financials and fundamentals. The company IPO'd a few years ago, and it was received with a lot of fanfare. The stock price was really high. It was well above $80 per share, got up to above $120 per share. But now the stock's down to $31 a share, so it really settled down. This year to date, the stock is down by about 29%. Most of that is that one-day drop that happened on this week on Thursday. Now, if we look at the company's market cap, they're a $19.8 billion company. Their revenue is about $3 billion, which makes the ratio of revenue to market cap, you're paying about 6 times revenue for the company. A lot of analysts cover this company and they have a buy rating, and they say that the stock price is discounted by 33%. That's interesting. Looking at the growth of their revenue, it's been really good. If you look at the last 5 years, they've grown every year, and they grew 25% last year. They keep getting bigger as a company. Their total revenue in 2023 was $2.8 billion. What makes this company unique and valuable, in my opinion, is they produce free cash flow. And the cash flow they've been producing is quite high for a young company. They provided guidance, and I'm going to use the guidance on free cash flow for the valuation. The balance sheet's in really good health because they have more cash than they do debt. That makes their balance sheet very high quality. And obviously, if you don't have net debt, you're in a very good position from a balance sheet perspective. Analysts cover the stock. A total of 24 analysts voice an opinion on the stock, and they believe it's discounted by 33%. They're not profitable yet. It's expected they're going to be profitable in 2027. So for now, I'm going to work off of their free cash flows to value the company. Now let me cover the Q1 earnings report that caused this big sell-off in the stock. First off, in the first quarter of this year, their revenue went up by 22%. That's a good thing. Their bookings went up 19%. Good thing. The amount of shares they did issue out did go up. That's a bad thing. Their net liquidity went up, meaning they have more cash. That is a good thing. Their average daily users went up 17%. Very good. So there was some good news in their Q1 earnings. Where investors, and I would say the market really was disappointed, is in their guidance. And we've seen this as a theme here in 2024, where really good companies like Meta, as an example, they announce their guidance and then the market sells off. They completely ignore that they just had a really good quarter, and they're just so disturbed with potentially having an okay quarter to follow. In the case of Roblox, their revenue is going to show growth in the second quarter. That's a positive. Overall, their free cash flows that they project for the year is going to be at least $350 million. That's a real positive. I don't see a big problem with that. So overall, I think that the sell-off from Q1 may have been overdone. But, Mr. Market, it does what it does. Certain momentum stocks either go up or down. And Roblox is one of those stocks where it's a little unknown if they are going to be a big company or if they're going to continue to really play with the small cap stocks. I think this company is ripe for being acquired by one of these bigger companies, whether it be a Microsoft, Amazon, Alphabet, Meta, one of these big media companies like a Disney. Disney would totally do a lot with Roblox. So don't be surprised if in the next year or so, Roblox gets acquired by one of the big companies. I completed my own valuation of Roblox using their free cash flows. I started with their initial cash flow for this year is going to be $350 million. And that's because they guided that that would be the worst case scenario for free cash flows. It might be better than that. I'm going to grow cash flows by 25% in years 2, 3, 4, which is very reasonable. It's a high growth company doing really well. And terminal value, I'm going to grow cash flows after year 4 by 6%. I'm going to use a higher than typical discount rate just because Roblox is not yet profitable. They are a small company and they could surprise me. So I'm going to have a higher discount rate. When I use those factors, I get an intrinsic value and net present value of all those cash flows equating to $14.7 billion. I'm going to add the cash of $2.4 billion and take away debt, which is roughly $1 billion, to get what I think is the equity value of the company is $16 billion. But their market cap is currently $19.8 billion. So they are currently trading at a premium of 18%. So maybe all the people that sold the stock on Thursday were right, that the company is overpriced. We'll see. As the company operates and they change their fundamentals, the valuation can go up or down. As mentioned, my decision to buy Roblox was primarily based on how much I like the company, and I still like the company. I think they're very different than other businesses out there. Video games and the development of video games by the legacy players like Activision, which is now part of Microsoft, or Electronic Arts, that's old school. The new school is what Roblox is doing, which is creating a platform and then having developers develop their games and then sell their games on the Roblox platform. I really like the whole model. And I think that a player like Apple would love to own Roblox, or Disney, or somebody else. So I continue to really like the company. The balance sheet's in great health. If you have zero debt and you have a really nice balance of cash, you're doing great. In the case of Roblox, they continue to generate free cash flow. So the balance sheet is in great shape, very comfortable around that. The discount. The discount is not there for Roblox. And right now, at an 18% premium, that's just too high for me to pay to continue to accumulate shares of Roblox. I'm going to hold on the stock, just hold the shares until the fundamentals change, the valuation changes for the better, or if it changes for the worse, I may have to sell my shares in this company. Thank you for watching the video. I hope you found it interesting. I'd love to hear what you think of Roblox, what you think of their business, and what you think of the earnings for Q1. Did you think it was overdone, that it sold off so much? Or do you think it was right? I'd love to hear your opinion on that. Thanks again for watching. Good luck investing in 2024.